Okay, good afternoon, everyone. My name is Bill Levinson, managing partner with Levinson and Associates. And with me today, we have the Joseph Lochran, our marketing vice president, and then we have our special guest speaker and VP from John Hancock. So great stuff to talk about. Joe, can you just mute all lines? We happen to have a record number of attendees on today, which is always great news. We appreciate everybody taking the time with us, especially in the middle of a Thursday afternoon. Getting a little feedback, Joe, if we can just mute everyone, that would be great. What we're going to talk about today, the new way to sell life insurance with living benefit riders, of course. And, you know, you think about long-term care sales years ago, it was such a hot part of the industry. And we all know what happened with large blocks of long-term care business. Premium rates skyrocketed and customers called, they were upset, and all of a sudden it became a very small niche part of the industry. And with long-term care riders built into a life insurance chassis, that is the new way to sell long-term care and, of course, life insurance with living benefit riders that pays while the client is still alive, right? We all know the way to spin life insurance these days. And John Hancock has put together and has revamped an awesome program that we're going to discuss today. A+ rated. Hancock's been around a long time. Great name with CPAs, estate planning attorneys, MDRT, top of the table insurance agents, financial advisors. So we feel that it's our duty, yes, to represent all of the top carriers in the country, but to also cover the gaps, you know, with every niche. And John Hancock kind of stands alone in that middle to high end net worth for your certain clients that fit into these parameters. So great stuff to go over. They also have a new program for table reduction. They've increased non-med limits, which we're also going to discuss. And then before we introduce Andrew, I want to go over just a few things for a couple minutes, and then Andrew's going to take the wheel, and then me and Joe are going to come back on because we actually have some incentive programs we put together just for today's call. Also, bottom left corner, we're getting some great testimonials in lately. I always love to see this because, you know, let's face it, you can hear that, yes, we're the best and we're so great and we're the fastest growing IMO in 2017. But when you hear it from agents just like yourself, to me, that means the world. So if you notice in the top left, by far, the best IMO I have ever worked with. I give them a 10 on a scale of a 1 to 10 for the most IMOs that I've worked with. All of this, by the way, is on the Levinson Facebook page. So we didn't just make these up to look like we're that great and special. I'm a new agent just getting started in the business. Levinson and Associates makes it so easy. And then on the bottom left, phenomenal organization with 5 years of experience in the industry. I could not be happier with the service, etc. So check these out on our Facebook page. I always love to see agents just like you and I that are in the same exact place. You know, some are new in the business, some are veterans, but you can see all of the great comments there. And I love that stuff because it's real, it's genuine, and to me that means all the difference. Okay, moving forward. So real quick, what we're doing, and I'm so excited about this. I am launching the first ever Levinson podcast for 2019. So we are starting this month in January. And the first guest speaker, okay, is a Forbes of 500 Cleveland Clinic's Man of the Year. He's also my mentor for over 20 years, Mr. Jeff Levitetz. He's going to talk all about business and discipline and motivation and what keeps him grounded, and just a great person to listen in on if you're driving to an appointment or to the office in the morning or after work or you're at the gym. This is going to be awesome with tons of value add. It's free, obviously. Anyone can listen in either on our podcast channel, through our website, or on YouTube. But he's going to be awesome. He's also, or he was, the assistant U.S. wrestling head coach, okay, a few years back. So just a great overall guy. And then this is what I'm the most excited about. If you have heard of Gary Vaynerchuk or Gary V, he is one of the largest digital motivational marketers in the world. Okay, he's like the new young version of Tony Robbins. He has agreed to be my guest speaker, okay, for 2019. So I'm flying up to New York City in 60 to 90 days to do the actual audio and visual recording, and then we're going to post it live about, it's probably going to be up and live by summertime, okay, but we're going to record about 60 days out. So it's already locked in, 100% done. Gary V will be our guest speaker. And I'm telling you right now, if you don't know who he is, look him up on your computer or your smartphone, but listen to him, listen to some of his ideas in marketing and branding yourself, okay, now and into the future by using, you know, obviously an online presence and social media and videos, but he is a game changer, folks. He owns Vayner Media, Vayner Nation, Gary Vaynerchuk. They just created a new wine company. I mean, big stuff. So check it out when you get a chance, and it's called the Bill Levinson Experience, launching January 2019. Couldn't be any more excited. Okay, what we're also doing for today's webinar, if you are with John Hancock under Levinson, great news. If you are not under us yet, okay, with John Hancock, what we're going to do, if you send me an email after today's webinar, if you get appointed with us, or if you already are, you have to finish the whole webinar. I'm going to send you, we have a brand new book called The New Rules of Retirement, and it literally makes an indexed universal life sale for you. Okay, we have agents giving these out to prospects, and it's an easy 30-minute read. By the time they're done, they're ready to make an appointment with you to discuss IUL. Okay, it is a great book. I'm going to mail you out a free copy. If you're under us now with Hancock or you transfer under us, I'll mail this out for free. Plus, we have the leads for contracting. So if you transfer over to Levinson, we meet or beat your current commissions, and we send you 3 free exclusive leads as soon as you place your first app. Okay, so take advantage of this stuff, you know, where it's all free. There's no skin off your back. There's no small print. You're not locked into us, or where you can't get a release, or we don't play games like that. But all we're asking is if you show your trust and faith in us, we're willing to put our money where our mouth is and make sure that you're happy and taken care of. So without further ado, let's jump right in here to our official guest speaker with John Hancock, our VP, Andrew Spiro. Andrew, you there?
I'm here. Can you hear me well?
Yep, loud and clear.
Bill?
Yep.
Perfect. Anyway, thank you. Thank you always. It's a pleasure, a treat to be a guest, and super excited to be here. I tell you, Bill, whenever I hear your enthusiasm, it's pretty contagious. It makes me want to quit and start working for you guys. It's amazing what you're up to, and I love to hear how you guys are just growing. It's phenomenal. So, Joe, do you have the helm? Do you have the controls?
Yep, good to go.
Okay. All right. So I unfortunately am remote. So for the audience listening, I cannot actually see the presentation. So we're hopeful that this will be smooth. If not, Joe, just interrupt and let me know. But we're really excited. I just came back from Boston. I'm happy to be back in sunny Florida. It's a little overcast today, but it beats 18 degrees. So very glad to be home. And this is the first webinar that we've done for any general agent that I work with. And we came back with a lot of new material, and I'm excited to make some significant announcements. So let's start with there. Vitality Plus. Obviously, anyone who knows anything about John Hancock knows that we are all in on Vitality. And we've renamed our Vitality Rider to Vitality Plus because we have a Vitality Go option. And we have new enhancements to the program that I think Bill and Joe are going to be right up your alley. So what we have found basically is that substandard risks, people with medical conditions, if they buy into the Vitality program, if they participate, if they engage, we have found that what the benefits are astronomical. And I'm not trying to exaggerate or over-articulate my words. So for those of you who know Bill, Bill's an intimidating guy, right? He's in great shape, good-looking guy. If he buys into Vitality, I know Bill. He works out, he eats right, he exercises. He's not really going to be changing his lifestyle that much because he's a fairly healthy guy who lives a healthy lifestyle. But what if you have someone who's 300 pounds? What if you have someone who has cancer, heart attack, diabetes? We have found that those people who participate in the Vitality program and are fully engaged, they change their lives. It's the people that you run into the supermarket and say, my God, they recognize you look fantastic. You dropped 100 pounds. Or the person who, was overweight and, had heart conditions, diabetes, and now all of a sudden is eating healthy and you don't even recognize them anymore. So those people, if we can get them to engage, we have found the benefits are huge. So we've got a program hot off the press that I guarantee is going to help Bill, all your agents generate more business. So just to give you a little background, we did a global RAND study on activity incentives, and it was a 400,000 sample size. And the correlations between physical activity and health were just numerous. So for example, someone like Bill, who essentially just, does 1 to 2 days of physical activity, and Bill does a lot more, they're 41% less of a chance of dying from coronary disease, heart disease, than if you just didn't exercise just 1 to 2 days a week. For someone who exercises just 1 or 2 days a week, 30% less chance that the likelihood of dying from any cause. So you increase your longevity just by working out or doing any form of physical activity 1 or 2 days a week. And then the actual lifespan increase for just doing 15 minutes of moderate physical activity a day, going for a brisk walk, going on that treadmill, you'll increase your longevity by 3 years. And the high at risk groups, oh my God, if they basically engage, we're seeing that they're, with using our the iWatch, by using the Fitbit and all the other programs that are associated with Vitality, we see basically a tremendous increase in their physical activity if they engage. So they're increasing their light workouts, their standard workouts, their advanced workouts by almost 50%. And in the US, we're seeing just overall for higher risk members, we're just seeing their participation, if they're, engaged in a healthy regimen, we're just seeing their participation increase. Why? Because hopefully people are motivated to live a better quality life and to live longer. So what we've turned around based on this RAND study and based on the fact of them, researching their interaction between Vitality and those who engage, especially those who are substandard risk, we want to now provide those substandard risks bigger incentives to get them engaged more with Vitality. What does it mean, Bill, to you and your agents? It means that they're going to get greater discounts when using Vitality Plus. So there's going to be a two-step program. One, effective immediately, and you'll see the date is January 22nd. Immediately, anyone who is table rated will get a minimum of a 1 table increase in their offer. So if someone is table 6, which we rate as 250%, they will become a table 5, 225%. If someone's 150 and they're 80 or less, they become standard. This isn't a table shave program. It's not for 5 million. It's not for 2 million. It's not a table 2 to standard. This is anyone who is substandard, and the Vitality program is good for up to 20 million. If you add Vitality to the sale, if you elect Vitality Plus, you'll be able to reduce the offer from a 1 table reduction automatically. Now, for those of you who need a refresher on Vitality, there's different levels of engagement: bronze, silver, gold, and platinum. Even if they elected at bronze, which is assuming no engagement, they will still get the 1 table reduction. Again, if they're table 2, they'll get a reduction down to standard. Then, come February 4th, we're going to essentially increase the Vitality credits. So we just did a sale just recently. It was about $200,000 was the annual premium. The client was rated candidly a table 4. The table 4, they said, we're absolutely going to use Vitality. The client's got a combination of coronary disease and diabetes. We were the best offer. They said the client is all in on trying to see their doctor regularly, working out, eating healthy. It's all things they need to do. They're committed to doing it. They want to see their health improve. They had a big wake-up call going through the underwriting process, and the best offer was a table 4. So we're going to elect a policy with Vitality Plus. So the table 4 became a table 3. The premium goes down from $200,000 to $175,000. Now on February 4th, we're going to be able to illustrate greater Vitality discounts. So if you elect silver or gold or platinum, the average discount was between 2 and 10% on substandard risk. The goal is to increase the discounts to 15 to 20%. So that means that 200 that now became 175, both in premium and offer, coincidentally, will now go down to about $150,000. The agent was ecstatic. The client's ecstatic. It's a $150,000 payday. I would say it's a win-win-win. The consumer has a track to run on to help them live a longer life. So this is not a shave program. Just in summary, we have found that for people who have some medical conditions, whether minor or significant, that are rated, we are going to give them a table reduction if Vitality Plus is just added, even at bronze, no engagement, and we're going to give them extra incentives by giving them greater Vitality discounts, just generally between 10 and 20% off further their premium if they engage, which is going to really drive down that premium, because we feel that those clients have the most to gain in terms of overall improving their health, living a better quality life. And we want to give them the motivation and the financial incentive to get on board. So any questions, please let me know. I know the lines are muted right now, but what I'm telling agents is, in GAs, make a list of your substandard cases. Let's take a look if, being able to reduce a table and getting a further discount by showing Vitality Silver, Vitality Gold will be enough to turn some of these sales, help some of these sales cross that finish line. So that's number one. And if you go to the next slide, you'll have an idea where basically it shows PUL at bronze, right? So we have our low-cost UL, and we basically are showing right now at a bronze, which is no engagement, it's going to be $25,000. It's going to be the premium. Today, if you add gold to it, the premium will be $24,400. So it's about a 5% reduction. And then you add now the new version, you're going to get a table reduction, and just the discount alone is going to bring it down from essentially $24,400 down to $21,200. So huge savings, brings us to the top of the charts, and again, gives some of these substandard risks a great track to better themselves, improve their health, and live a longer life. Okay, second big announcement coming. Express Track Underwriting. Levinson is the best probably in the country at express underwriting. They're phenomenal with technology, with e-tickets, drop tickets. So John Hancock has an e-ticket for term. We have a paper ticket that can be used for permanent policies. We have express underwriting. So basically ages 18 to 60 are eligible. If you drop a ticket, it's the only way you can get express underwriting, either a paper ticket or electronic ticket. We then will pull the apps where the clients are applying for, it was $1 million or less, and they're between the ages of 18 and 60. We've now increased the limit up to $3 million, and Bill will correct me afterwards if I'm wrong, but I believe that's among the highest, or is the highest in the industry. So in just plain English, what that means is you drop a ticket, it'll take you 5 minutes, hopefully, to complete paper, electronic. Within 48 hours, we get that ticket. We'll then pull out everyone that's between 18 and 60 that's applying for $3 million or less. We'll do background checks on them. This is after the phone interview where we take the app. We'll do background check, an MVR check, RX check prescriptions. We'll do an internal inspection. And if everything comes back good, we're able to offer standard plus, preferred, or even super preferred within 3 to 5 business days of completing the tele app. And essentially, we can issue a policy with no blood, no urine, no EKGs, no APS records, and we can even add a long-term care rider, vitality riders, whatever you need. So again, if you just want to turn the slide for the process, you complete a ticket. Within 48 hours, we call your clients. We do the app on the phone. Within 48 hours of getting the app back, we do our internal checks and balances. And then within 3 to 5 business days, if they qualify, we call you up, we call Levinson, and we say, we've approved the client at best class, $3 million, permanent term, doesn't make a difference. We can add the vitality riders. Do you want us to issue the policy? Yes, we do. And you get a check on delivery. Couldn't be any simpler. We're so excited. $3 million, we went from $1 million for the Express Track program. The only way you can get the Express Track program again is to drop and utilize a ticket. Speak to Levinson, they're masters with technology. And if you're not familiar with this, you should be, and they'll get you up to speed. Let's pass through the slide that shows medical impairments and non-medical impairments that will prompt traditional underwriting. For the most part, this is not a way to skirt underwriting. This is for healthy lives, standard or better. I will say that a lot of companies, not knocking any of them, like Principal, you have to be preferred or you kind of get knocked out. And usually if you're knocked out of a simplified program like this, an express program like this, then all the companies knock you out. So the fact that we offer standard plus, preferred, and super, and we go up to 3 million, we think you'll have your best chance of getting your clients through with us. If you do field underwriting, we have agents that have like a 90% success rate. Overall, the company is tracking at about 44% in terms of clients getting who submit tickets, who meet the age parameters that are getting through without any underwriting. The last major announcement is the fixed index loan option on our QMIUL. Bill was kind enough to invite me to do a premium financing seminar in Boca Raton, Florida. We talk candidly about our new AIUL product, which is an industry leader in income and distribution, which makes it a powerhouse for premium finance business. Well, we're going to have further enhancements that are coming. The one disadvantage we had in our product were index loans. Index loans are where you let your money ride in the indexed account, and we charge you a loan rate, and essentially you can create an arbitrage between what the index returns and what the loan rate is. We had our numbers looked good, but the problem with the contract was we didn't have a fixed variable loan rate that many competitors have. We are now going to be introducing our fixed loan rate. We're expecting it to happen March 1st. The loan rate will be a guaranteed rate of 5%. So no matter what happens to interest rates, your clients, if they take a variable fixed loan rate, will be charged 5%. They can keep their money in the capped account. If the capped account return is 10, they're getting 10% plus the guaranteed bonus multiplier. For those of you who know, it's another 55%. So they would get 15.55. They'd be charged 5. They just made 10.5% on their money. It's a phenomenal option. We do have standard wash loans as well if they don't want to be as aggressive with that. But we designed it having its own separate capped account to keep the integrity of the portfolio and to create less volatility for those who are doing standard wash loans. So the numbers look phenomenal. That's all I can tell you. It's going to be an industry leader on wash loans, and now we're going to be an industry leader on variable index loans. So any income producing cases, any finance cases, please contact Levinson Associates, and they'll be able to walk you through this major into our product. It really is a revolutionary product, and it's a killer. Okay, so if we go here to the fixed index loan details, I kind of summarized that, so we'll take a pass on that slide. So we're going to be looking at the fixed index loan slide, a closer look. On this slide, you'll see that right now, our standard loan on a male 45, paying 5 years of premium and showing 20 years of income, you'll see essentially that we were among the top echelon at $158,000 of income, and that was a standard loan, and everyone else is showing index loans, which is like a much more aggressive option, because if the index returns 0, you're charged 5%, where a standard loan or a wash loan, you're not going to make an arbitrage, but you'll never be charged an interest rate. Well, by showing now our new fixed income or our new fixed income loan, The income went from $158,000 to $186,000. We leapfrogged to number one. So, we're a leader both, again, for standard loans and with the new fixed index loan. No one's going to be able to touch our income. And if we go to the next chart, I didn't know if I was supposed to put this in here or not, but this is our heat charts. This is sexy talk when it comes to life insurance products. And if you'll see here, green is good. Green is money. And you'll see here, regardless of whether it's a male, regardless of whether it's a female, pay to retirement or 5-pay, that's a lot of number ones on the chart, a couple twos and a few threes. There's only one area we're not overly competitive, which is, females, candidly, on pay to retirement scenarios that are older, which we don't see a lot of requests for anyway. But this is a killer product. Okay, the last thing I want to make an announcement is we just repriced our low-cost index universal life contract. This is designed for death benefit. It's designed to be the cheapest product in the market. The beauty of this product is you have a floor of 0. You're going to have tremendous guarantees to beyond life expectancy, and you'll have the ability for your clients to earn returns over 20%. And Bill, you heard me correct, over 20%. This contract has guaranteed multipliers of 65% starting in year one for the life of the contract. And in our high cap account, which is a 14.5% cap, it has a 38% multiplier, which takes you over to 20%. So the bottom line is the upside is huge. The downside is minimal, excellent guarantees. Take a look at these premiums here. Male 55, super preferred, $1 million death benefit, on a 6% in our capped account on a level pay scenario. The closest competitor is Zurich, then Nationwide, and so forth. And then if you see here, if we show the max rate, again, same scenario, Nationwide is the second competitor. But take a look at the next slide, Joe. When we're doing single pays, 1035s, dump in, short pays, look at the spread here. I mean, we're talking about on this male 55, $1 million death benefit single pay. The closest company is Global Atlantic, 20% more expensive than AIG, 23. Prudential's 41%. If we look at the max rate, the numbers even get bigger, and then the closest competitor is 30%. Pac Life is 41% more expensive. Prudential 62. I am telling you that I have general agents and agents that are scouring their book of business, looking for replacement opportunities. This is the product you want to use. There is nothing that's going to look better in the industry than our low-cost protection IUL. It's got a great target, great guarantees, great upside, good cash value. Again, it's a death benefit-oriented product, low-cost design, but good cash value, but no one is close. So that's the housekeeping. Forgive me. I'm super excited. I didn't mean to go on too long. Let's talk about our long-term care rider now. Joe, are we good? Are we in sync?
Yep, perfect.
Okay. So we all know the story about long-term care, right? There's basically 44 million adults in the U.S. Are providing for, personal assistance for family members with disabilities or other care needs. 70% of the caregivers have clinically significant symptoms of depression, and the national average for 24-hour home care or 1 year of nursing home is more than $102,000. So what's going on here? We have an epidemic. We have caregivers that are far and few between that are known based on actual studies. They're getting sick. They're getting stressed. To have your son or daughter take care of you when you're in a long-term care claim situation, it's creating so much stress for your family, for your caregiver. Do you really want to burden your family members? But we also have an epidemic where we have less caregivers, and we've got an epidemic of increasing price, increasing costs to get the proper care. So more than ever, Americans are realizing they need a plan. They need something enforced, something to protect them in case they need long-term care. So paying for care, is obviously has a significant impact on income. Providing care, for chronically individuals, again, make healthy caregivers ill. And so when we talk about reimbursement or indemnity plans, and I'm not passing any judgment, Joe, it really becomes a question of we surveyed seniors, and the seniors basically said they don't even want to speak to their kids about LTC. And we asked why. And the seniors basically said, it's personal, and I don't want to burden my kids with it. So when you're dealing with an indemnity plan, that you're paying a little extra money for the flexibility of being able to have a non-qualified person as a caregiver. But yet, when we spoke with most people, they don't want to even talk about this with their children, and B, because they're too embarrassed and they don't want to burden them. So why would you pay extra money to have your son or daughter, who probably don't even live in the same state with you, quit their job to take care of you when you were even too embarrassed to talk about this to begin with them? So I think, the idea of having indemnity and paying more for that flexibility has to be re-examined. I think there's certain circumstances that make sense, and I'm not saying reimbursement model, which is of course what Hancock does, is always the best solution, but something to think about. But the bottom line is, regardless, having a combination life insurance and LTC rider has become the hot topic and the hot product in our industry. And let's take a look at it and why it's become so common now that one of every 4 policies that I issue has our long-term care rider. So Medicare is somewhat limiting in what it'll cover. Medicaid, clearly not our client. Self-insure, it's risky, right? How much monthly income is available? I always tell people it's not about how much you're worth. I've spoken to people that are worth $100 million and they can't write a check for $5,000. They're all leveraged. It's land, it's property. It really has to do with cash flow. And then what are the tax implications? Are you going to have to cash out stock, sell a property, pay capital gains to fund life insurance? So having a plan in place, to me, is really key. And the combination of life and LTC is designed to help clients protect themselves and their families by providing monthly access to the death benefit while they're alive to cover long-term care expenses on a tax-free basis. With our contract, the death benefit's reduced dollar for dollar. And the beauty here is, what you don't lose, you don't use. Any unused portion of the death benefit goes to the named beneficiaries, whether it's the wife, the kids, charity, trust, doesn't make a difference. So if we flip the page, how the John Hancock LTC rider works, the client applies for life insurance. He elects the LTC rider. It's one extra page of the app, because we also look at morbidity as well as mortality. And then the client, is issued a policy with a long-term care rider. If the long-term care benefits are not used, again, the death benefit passes on to the beneficiaries. If the long-term care benefits are used, then the beneficiaries receive whatever is left over tax-free. So unlike traditional LTC, where if you don't use it, you lose it, this will always pay off. And there's a lot of other payoffs, which we're going to go through in a second. So if we go to the example, there's also 2 ways to elect our LTC rider. So example 1 is a $500,000 policy, and we're going to accelerate 75%. So in other words, you can accelerate 50%, 75%. Obviously, the lower acceleration, the lower the cost for the rider. Our rider, being a reimbursement rider, Joe, it's super inexpensive. On average, it's usually, especially the one in Florida, we have 2 different riders that are available in different states, like an extra 7 to 9% of premium. So in this case, if we're going to accelerate 75% of 500,000, that means we've got 375,000 that we can use for living reimbursement for LTC costs. And we can elect 1, 2, or 4% as an accelerated percentage. So in this example, 2% of 375 is $7,500 a month. The second example is just saying, okay, we've got the same $500,000 death benefit. We want to be able to use all of it. So it's 100% acceleration. So that means that the death benefit and the LTC benefit are the same. We can elect 1, 2, or 4%. 1% would be $5,000 a month. 2 would be $10,000 a month. 4% in this example, we give them up to $20,000 a month. Because we're a reimbursement model, not indemnity, we're not subject to the IRS per diem. So we can go at issue up to $50,000 a month. Bill, this should be a good trivia question for the next call, but the average age when you are expected to utilize LTC, I always ask this question because I always thought maybe someone in their late 60s, early 70s. Actually, the actual age is 83. So when people say 20,000, it seems like a lot of money. Well, if someone's 50 today and the average time for claim is until they're 83, which is 33 years from now, with inflation and with medical cares going up and with care providers being more and more scarce, I can't imagine what the costs are going to be. They're going to be probably astronomical. Okay, key considerations for us. Again, we are a reimbursement model. So professional care, not informal care. You can't have your sister take care of your mom, but does your sister want to change the bedpan? Does your sister want to quit her job in Connecticut and move down to South Florida? Probably not. And does your mom want, their daughter to be, burdened with having to take care of her, knowing with all the studies that are out there that it creates so much additional stress, which results in depression and physical issues, sicknesses and other problems. Like, why would you wish that or even ask a family member? The reimbursement model that we offer helps, basically, in our opinion, effectively not only administer the plan well, but make it easier to provide care. From a reimbursement standpoint, we can work directly with the care providers so that, the insurer doesn't have to be a bookkeeper. Two, the LTC maximum benefit is the amount that they choose, not the per diem. I always use the line, Joe, that if the IRS told you how much you could spend on your next family vacation, it probably wouldn't be such a great vacation. We're not subject to IRS limits. The clients can get the care that they want and spend the amount they want, not having to be limited to that per diem. And it minimizes tax consequences, especially with a lot of recent changes to the tax law. And we'll get into that in another minute. John Hancock, we're one of the leaders. We're not new in this market. We have extensive claims experience. Again, no need to manage receipts. We have a new LTC portal where clients can go online if they want to see and manage their expenses. The quality of care, because we require, it can't be a sister, it has to be a qualified care professional. That your loved one or yourself, whoever this is for, is going to get the quality of care that they need. This is not a joke. And we have care advisory services such as Provider Pathway. I've got to tell you this quick story. It's one of my favorite ones. An agent of mine that I'm very close with, of course, Bill knows him as well. His mother needed long-term care. They had a policy with us. And the agent has a policy in his own life, but his mom developed Alzheimer's, and she was not insurable and certainly couldn't qualify for an LTC policy. I'm in the business 27 years, and I have to be honest, my parents, knock on wood, are still alive, and they're healthy, knock on wood. But if I was hit with, a situation like that, I'm not sure where to start even. And what when the agent told me about this, I said, that your contract that you have on your life has this thing called Provider Pathway. And one of the benefits they offer is they'll map out a game plan for you, not only if you need it, but if any family member needs it. And they can help, not only map out a game plan, but even negotiate discounts because of the leverage that John Hancock brings to the table. So he ended up calling, and we not only took care of his mom, we got her into a specific place that was designed for people who have her stage of Alzheimer's. They negotiated a discounted rate, and they did this all for someone who's not even a John Hancock policyholder, but they did it because the son, who's an agent in this case, happened to be a Hancock policyholder. So it's one of my favorite stories, and I can't tell you how important, because we're all in the business, and I still would need some guidance as to what steps I should take if, God forbid, something like that happened to a family member of mine. So why John Hancock pays a reimbursement benefit versus other carriers? As far as I'm aware of, all the life and LTC combinations, they're all indemnity plans. Some are qualified plans, some are not, except for John Hancock, which is reimbursement. So we're an outlier. But I want to just take a couple minutes, Joe, and go over why I think we provide a better benefit, or at least an alternative that you should consider. So, John Hancock takes the LTC responsibilities, and I've been repeating this over and over, off of the family members. You can only hire professionals to provide care versus everyone else where, paying a child or spouse, it might sound great in theory, But in reality, I'm not sure it's the direction our clients want to go. And I can tell you, matter of fact, when we survey them and speak to them, they don't want to go that direction. They don't even want to talk about their kids having to take care of them. I can say some descriptions that they write, like, shoot me, put me out to pasture. I'll never, burden my kids. I would never even talk about it with my kids. We preserve as much of the death benefit as possible because we reimburse for qualified LTC expenses only. With the indemnity contracts, you can take out more. But again, with our plan, whatever is left over goes to the beneficiaries. And the idea is to have a pool of money that you need when you have an LTC claim. So to be able to take out more sounds great, but then what happens if you have a claim and you don't have the funds necessary anymore? The other thing that's important is that the client elects their maximum monthly benefit. We talked about this. We're not subject to IRS per diems. Everyone else there, is subject to the IRS limits and wins. And, based on Trump's tax plan, there was a lot of talk that the per diem limits were going to go down. They didn't, but there was a lot of talk that they would. And it was good, I think, for people to understand that when you do an indemnity plan and you are subject to IRS limits, that's going to fluctuate and that can change based on legislation. So you're really at the mercy of what the mood is in the country versus our plan. And the customers for reimbursement can turn the billing responsibilities over to us. As I mentioned earlier, you can assign benefits so we can work directly with the care providers to obtain receipts and make payments. The billing responsibility for indemnity plans falls squarely on the policy owner, their family, or their advisor. So they're doing all the bookkeeping. And then this is important. The LTC benefits are income tax free. So tax reporting and a claim is simple. As a result, we don't require a Form 8853. It's not necessary with us. With the indemnity plans, many of them, the 1099 form is sent indicating benefits were paid on a per diem basis, and a Form 8853 is required to determine the amount that may be subject to income tax. So we feel it's an easier process, and I want to show you now some of the numbers because I think this is critical here. So we've got a person here who's a male 55, and we're showing a female 55. And if you look at our numbers here, we have essentially the lowest premium, and the highest benefit. Again, we can get above the IRS per diem. So you compare us to AIG, Prudential, Protective, we're essentially at $6,300 for a male 55. And we were able to provide in this case, because it's we're looking at I think it was $1 million of protection. We're able to essentially provide $20,000 a month with a 2% LTC rider. Everyone else is limited to 10.8. So lower premium by 20% on the male and the female minimum, and double the benefit. If we go, Joe, to the next slide, the beauty here is that we have another rider. I'm going to spend a couple of minutes talking about called the Critical Illness Benefit Rider. And we call it the triple play. What's nice about this is that we now can cover all bases. We can cover, if you get sick, which is the critical illness rider, if you have a critical illness, and we'll define that in a few minutes. We can cover if you live too long, and if you ultimately live too long, you're going to need long-term care. And then obviously we're all ultimately going to die, and we're going to provide a death benefit. So we can provide, coverage. We can basically cover all your bases with our riders. So let me talk about this critical illness rider. When I did the premium financing meeting for Bill, I brought this up as a side note, and it got a lot of questions, and there was a lot of interest. And we have the Rolls Royce in the industry of the critical illness rider. So the good news is that many illnesses that were once considered life-threatening are now highly treatable, and patients, are generally surviving. The bad news is that the cost of survival can be very expensive. So if we go to the next slide, it's a little bit of a downer here, but nearly 40% of the people will be diagnosed with cancer, with some form of cancer in their lifetime. And that's scary. So you look around the room, and half the people are going to have are going to be diagnosed with cancer. If we look at the next number here, 14.5 million of those same people that have been diagnosed with cancer are living beyond their cancer diagnosis. So they've been diagnosed, They're going through treatment, but they're surviving. Again, that's the good news. But the consequences, when you're going through that, I am dedicated, Bill's dedicated, Joe's dedicated, everyone on this phone who's listening to me is looking for ways to improve their sales, to learn more, to be more efficient, more effective, connect more with their clients. But if you get sick, your focus is on you. It's just a natural instinct. And your focus is to survive and get better. And what happens is, if you're going through cancer treatment, if you're going to hospitals, if you're dealing with heart attacks and so forth, you're losing your income, right? Because you're not out there prospecting. So there's lost wages. Your health insurance can only cover so much, so you're paying a lot out of pocket. Who's continuing to run the business? Who's paying the non-medical bills now that income is less? Who's paying the mortgage? Where's that coming from? What's happening to money that you were planning to put away for retirement? How do you continue those contributions? So it's like a domino effect where it affects every aspect of your life, right? You're working less, you're spending more, you're bringing less in, you're able to put less away, and in the meantime, the bills still keep coming in. So what the critical illness rider does is it provides a one-time lump sum income tax-free benefit that can be used for anything. It doesn't have to be used for health care upon initial diagnosis of a covered critical illness, such as cancer or stroke or a heart attack. The beauty is it's above and beyond the death benefit. It's not like the long-term care rider, which reduces the death benefit. This is above and beyond. So it's a one-time payment, lump sum, 30 days after initial diagnosis of a critical illness. And the beauty here is that this lump sum hopefully will be a nice bridge that will keep everything intact, allow you not have to withdraw extra money to cover extra bills, keep the savings going, keep the business running. It allows you to utilize it any way you want, so it doesn't impact your lifestyle if you get diagnosed. Joe, if we go through some of the details, it's available from ages 18 to 65. Again, it's a lump sum.
Andrew,
yes.
Andrew, real quick, we got a few minutes left. Just a heads up, okay?
Fair enough.
Okay.
The 7 covered conditions are cancer, heart attack, stroke, coronary artery disease, which is a bypass, kidney failure, major organ failure, and paralysis. 30-day waiting period. So you get diagnosed with cancer, God forbid, 30 days later, you show us proof you got diagnosed, we pay you a lump sum payment. It's as simple as that. We allow the maximum, if you elect it on a 10 or 25% of face amount basis. So if you have $1 million contract, 10% would be $100,000, 25% would be $250,000. $250,000 is the max. So you can put on a $10 million policy, but you can't get more than $250,000 as your living benefit. So it's a living benefit. It's payable 30 days after diagnosis of a critical illness. Your targets go up by anywhere from 10 to 20% by adding it. It's a really key product. Joe, because we have just a couple minutes, I'm going to pass through all the next few slides. And can we just go to, it says industry leading product and winning rider equals unmatched value. I think I'll end on this slide. And this one just shows it in a nutshell. We have one of the least expensive products in the industry. And this is showing you that our product, in this case, we were a male 45, preferred health, $1 million death benefit. It was a single pay, okay? And it was solving essentially for $1 million, I believe. Yeah, for $1 million. So our premium on a single pay basis was $94,000, which is considerably less than everyone else. And that included our long-term care rider, which would give the client up to $20,000 a month. And it also included a 10% critical illness rider, which gave them $100,000 lump sum tax-free above the $1 million. It doesn't reduce the $1 million at all. So if they got sick, cancer, heart attack, whatever, they got $100,000 that can be used any way they want to maintain their lifestyle. And if they live too long, they can get up to $20,000 a month. And you'll notice our premium of $94,000 is with those two riders. It's less than everybody else without either a long-term care rider or without a critical illness benefit rider. So with that, I think I'll end on that note and turn it back over to both Bill and Joe.
Yeah, that was excellent. I know we have a lot of information in a short amount of time. We're going to do this again, plus this is being recorded. Any questions, comments, let us know. We can always get Andrew on a three-way call with us, or our marketers can answer 99% of your questions. So great stuff. So real quick, if you are not appointed with Hancock, send in your licensing now. It's available on our website. Also, we're going to send out a thank you email. If you're already set up with Hancock through another IMO, use the leads for contracting incentive, okay? You're going to either match or most of the time beat your existing commission grid plus 3 free exclusive mortgage protection leads with your first application, okay? 1 carrier is 3 free leads. 2 carriers, you get 5 free exclusive leads. 3 carriers, you get 10 free leads. So 3 carriers, 3 apps, 10 free leads, okay? That's also a great way to check out our exclusive lead platform. All right, so real fast. Also, before I forget, with that leads for contracting, okay, and this is, yes, you have that platform. And then if you are appointed with Hancock through us, shoot me an email and I'll send you out that IUL book, okay? That is a great book that creates lead generation. I mean, you literally hand it to a prospect. It's the new rules of retirement, and it literally makes the appointment for you and makes the IUL sale. So a great piece to give out, especially holiday time, birthdays, anniversaries, anything. It's a great way to hand out your business card taped in the inside and say, call me when you're done reading. All right, Joe's going to talk about the resources for living benefits and link benefit resources, all built into our website, okay? So he's going to give you a 100-footer, and then we're going to close up in just a couple more minutes. Joe?
Yeah, thanks, Bill. So real quick, I just want to point out a couple things. Of course, these links will be included in today's thank you email, but we do have a living benefits section of CarrieLevinson.com where you can look at everything we covered today and more. There's even some great agent and client material that's included. So if you're interested, I'll give you that link in today's thank you email. You can go there and check out all the material. Also, we have a great section on the website for linked benefit resources. These are kind of our hybrid products, where there's single premium or short pay scenarios that provide a death benefit as well as long-term care protection. So based on the client scenario, we usually have a solution for every type of client that really kind of help put you in a position to beat any competition that you're up against. Also, I just want to mention real quick, we just came out with the 2019 Carrier Positioning Reference Guide. This is basically a snapshot of all the top carriers for term, GUL, IUL, and it kind of shows you each carrier, what their strengths are. I mean, to give you an example, we've got a table shape program with Lincoln. We've got some built-in living benefits with, of course, John Hancock, with American National, Emeritus. So this is something we can send out. It really kind of shows you kind of our heat map for the different products. We've got over 80 different companies. This is a great way to kind of wrap your hands around every scenario. And of course, you can call our marketing team and say, hey, I've got a particular case. What do you recommend? And we'll make sure that we give you the best recommendation for every single client.
Okay, good stuff, Joe. We're just about done here. Upcoming agent training events. So we all know you can have the best product in the world and a 282% commission level, but if you have no one to market to and no one to share your story with, then it's going to do you no good, right? Because you're not going to be able to sell product. So yes, you have to have a great product, but you also need a marketing program, a website. You have to have this online presence, and that's exactly what we put together with Agency Automator. Okay, this is a complete turnkey marketing platform that either you can do yourself, or we have the VIP plan where we do everything for you. You have a point of contact. You literally have a monthly call, and our team does every single thing for you on social media, e-blasts, your website, your quoting engines, lead capture, update 411 articles on your website for insurance and long-term care and critical illness, all the above. So real quick, what we put together for you are these live weekly training events. So every single Monday, Tuesday, Wednesday, Thursday, and now Fridays we just added at 2 p.m. Eastern. We have our tech team that's going to host the call every single day of the week at 2 p.m. Eastern, and you can literally just go on our training calendar on our website, okay? Or we'll also email a thank you to everyone that's on the call today, and we'll put a link in there for the calendar, and you just register for whichever day you want. So if you want to, let's say, dive into the CRM tool and have your assistant on the call with you, and you want to ask questions, and we want to make sure that you're comfortable with the platform, you register for Wednesday, 2 p.m. for the CRM program demo, and you are good to go and done. These are all free for you, okay? If you're using our platform, great. If you have your own platform, that's great too. The bottom line is we just want you to learn and sell product, because if you don't sell, obviously you don't make money, we don't make money, nobody wins, okay? So yes, we're providing all of this value add at no charge, just by you being a Levinson agent. On the very bottom in blue, new final expense carrier rollouts. We have 2 top carriers that we are launching on that day you don't want to miss, Lafayette Life and Lumico. January 29th, 2 p.m. Eastern Time. Right below that, we have a new exclusive lead program that are actually live transfers. You literally tell the system, hey, I want to work Tuesday from 12 to 4, and you will start getting phone calls with clients on your cell phone that say, hey, I need a quote for a $100,000 20-year term, and then it's up to you to make the sale. But that program is awesome. They're co-op leads starting at $25, okay, and you get a $200 free bonus when you sign up. So don't miss that webinar. It's going to be awesome, I promise you. Okay, second to last slide, and then we'll end right at 3 o'clock, is our 2019 Agent Expo. Do not miss this day. This is a day built around sales ideas, sales concepts, strategies. It's for you, okay? We're going to have over 300 agencies from all over the country. It's free breakfast, snacks, lunch, all the above, okay? I hope you don't miss May 10th, 2019. We have our keynote speaker, Joe Ross, hands down the best trainer in the industry today. Sign up now, May 10th, 2019. We're going to have our last slide here, which is our Positive Tuesday quote that we host on our social media pages, obviously our Facebook and our website. That's Gene Simmons on the left side of your screen, who I had the fortunate pleasure of meeting. You can see my facial expression. I was very excited and intrigued by Gene, first time I met him in person. We're going to end with this, and it has exactly to do with what we're talking about today, and it's basically creating your own path. Anyone can sit there with their hand out, okay, but it takes a lot to go create the marketing platform and get your name out there, okay, and that's ultimately going to give you exactly what you need for business goals and personal desires. We'll end with this. Don't be the kind of person that takes what you can get. Be the kind of person that creates exactly what you want. Let's all go out and make it happen. Have a great week, a good weekend, and great selling. Take care.